So today is May 29th. May 29th is a Thursday. Today we were gold, trading gold on the day. Just trying to break it down. Um, let's see. Today is Thursday, so we had seen the market was pushing down, pushing down. I really wasn't even looking at this on a higher time frame. I really noticed a lot of this stuff after the fact. Um, as we pushed up past this level here, breaking the structure because price was going down. That's a lot. I don't know, we good. So price. This was 3 weeks ago. Price is pushing down, pushing down, pushing down. Once last week came up and broke this lower high, actually this lower high as well, and pushed above that, and then pulled back to that same level, the same area that it broke. It started to make sense to me, and as I zoom out, you can see. Try to drag this over. I look at price. If price is going to continue after breaking structure there, I'm looking at it like we're going to go up to these levels here. On the day itself, it's like, all right, is it going to reach those levels today? Probably not. It may not reach those levels today, which is why I reached the most recent lower high from this pump down. I targeted that as my take profit. So that's on the 1 hour, just showing structure and everything on the 1 hour. When I drop down, let me break this down real quick. I normally go for pullback candles as my signal to go to a lower time frame to look for a W formation for a buy. But we had a 1 hour pullback right here that printed at 1700. My first trade that I took was at 1651. I didn't consider a 1 hour pullback at that time because the 1 hour pullback didn't print until 9 minutes afterwards. But I took a loss on that trade. I believe I entered on that trade based off of the 1 minute. So if we look at the 1 minute around that time, you got to remember we were already pushing up. So I'm looking at an opportunity to hit this level here, which that level when we zoomed out was previous day's high. So previous day's high was the target for me to get out. And on a 1 minute, this thing is all over. On a 1 minute, this is 1700. So I got in at 1651. So I believe it was this candle right here. Once this candle closed inside of the 20 EMA, I entered here because I looked at it. Okay, cool. We pushed down. We broke this level here, creating a higher high, and then we pulled back. I wanted to get in here, but I hesitated. That would have actually gave me 50 pips even if I would have entered here. From that candle to here was 58 pips. I would have actually won my trade if I'd have entered there, but I waited for price to close inside of the 20 EMA. Entering here because of price dumping down, and this was an engulfment off of this previous candle, and after this whole dump, you had a bullish engulfment. So I just hesitated. I wasn't really feeling it. I normally wait until price closes inside the EMA for my entry. But after taking that loss, I sat back and I waited. So as price started dumping down, I'm like, is this going to turn around? Is it going to start to sell? Is it going to reverse? I don't know. I'm still considering previous day's high as my target because I'm looking at the whole day was already pushing up. So this higher low level here was a support level for me because, okay, you had this higher low and then price broke this. Once it broke that confirmed the higher low, but then it never went higher and it never broke. Nothing really broke the higher low either. Price came down and touched it, went up, came back down, it now broke below it. But because this is a support level, I'm looking for a W formation at this support level instead of getting faked out to make me think that price is going to reverse. So a W pattern started to form here. You got to push inside. This was at 1746. My entry was at 1748, which was roughly, it was actually exactly here. On a 5 minute, if I look at it on a 5 minute, 1748, it was this candle. I looked at this pin bar engulfment and consider, okay, how at that time I entered at 1748. 1745 started this candle. 1750 prints it. So I'm sitting there waiting like, oh, I got 2 minutes for this candle to print. Should I wait 2 minutes for 1750 for it to print? If I do that, how far is this candle going to go? And with this candle going that far, if I enter there, where's my stop loss going to be? So with that being said, I look at it like, all right, risk wise, I have to consider if I enter there, where's my stop going to be? 30 pips is normally where I like to target, which was like roughly here. It never reached 30 pips, but if I did a 1 bar stop, it would have been 47, like 46 pips, and that was too risky for me. So I didn't wait for the candle to fully close like I'm supposed to. So I entered at 1748, which is 2 minutes early, because there was a lot of pressure, and I started to look at the level. I'm like, I would like to get in between this triple zeros or double zeros and this 25 quarter level. So I entered at 1748. Another thing is I wanted price to close inside of the EMA, but because of this pin bar engulfment, I started to consider that pattern, because another trader, shout out to Ralph the Trader, had brought it to my attention the other day when I posted a video, and he mentioned where he would have gotten in, and I felt as though that was a good explanation of where he would have gotten in at. I wasn't really considering that formation, the pin bar engulfment, and I believe Stacy Burks talk about pin bar engulfment patterns as well. So I considered that after he brought it to my attention. I'm like, wow, I really could have gotten a better entry off of that pattern. So when I seen this pattern, I said, okay, I'm gonna go with this. So when I went with it, that was my first one. And then at 1756, I started to manage it on a 1 hour, on a 1 minute. 1756 was right here. Price came back up to this level. I said, all right, I'm gonna enter again. I entered at 1756. Price started to pull back. My stop loss was like down here somewhere, because of where I entered at. I felt as though price was going to pull back and stop me out. The way it was moving, you had this strong bear candle in a 1 minute. You had another bear behind it, this little one. But I got out at 18 exactly, which was right here. It was this candle I got out. But right after that, price went up. As price started going up, I actually entered again, because the 1756 one I didn't close. The 1748 one, that's the one that I closed because at that time I had 2 trades at the same time open. I did 2 entries. I closed one to protect the capital, just in case, and I said, let me just see, I'm gonna just leave 1 in instead of losing 2, because I was already down on the day. I said, if I close this 1, that means I'll be down on 2. But if I leave 1 running and it works out, I can maybe clean up my losses with this 1 win if it does play out. Price started to push back up. I got in 1 minute later at 1801, because price pushed back inside the EMA, and I looked at it like, nah, this is actually playing out. So I had 2 trades in, back on 2 trade entry, and price started to work out in my favor. Price started pushing up. I looked at this as a lower high. You had a lower low, lower high, lower low, and then price broke that lower high here, creating a higher high and structure, and then pulled back, creating a higher low. And then once it broke this, it created a new higher high and pushed back down. I started to measure, and I said, okay, well, if I measure from this higher low to this higher high, this is my 50, 61.8. This zone right here, price never came back to it, but as you can see, price was consolidating, going sideways, and it was kind of had me thinking through this whole time, like, man, what if it's playing around? He had a doji on, I think it was a 15-minute doji. Yep, it was a doji right here on the 15-minute. Doji is just it's like a tug of war. Nobody has strength on either side, buyers or sellers. It's indecision. So that's where you got the sideways movement on the 1 minute. And on a 1 minute, I had to sit through this. This was how long was this for? From here to here, it was 33 minutes. 33 minutes. So for half an hour, I had to sit through this consolidation, but it's not creating lower lows. I'm looking at, okay, you have a high, you have a low, and we're not breaking either side. So I'm gonna stay in. We came above it a little bit, came back down to this higher low level, but then once we broke above, and I started getting into like 50. Other thing I told myself, with a rule I have set for myself, I'm supposed to take 50 pips regardless. If I have one trade, I'm supposed to take profit at 50 pips. The only way I can get more is if I have two trades where I close 50 pips on the first trade, and the second trade I let run. I go break even and I let it run for however far I want it to run. Because at times I would try to go for more than 50 pips and price would pull back on me. I would either get stopped out or go to break even, or just get less than 50 pips when I could have just taken 50 pips. So I created that rule for myself. Sometimes I don't stick to it. I'm supposed to. But in this example, I actually did utilize it. I actually didn't utilize it because I actually went for more than 50 pips. I went for 66 pips because I was still I was actually going off of this level here, which was the high of the day. This was the high of the day. And I said, if I get to the high of the day, I'll close out. I close out at 66 pips on that one trade, and then I let the other one, I moved it to break even, and I let it run. I believe once it got up to that previous day's high level, I closed it out. It went 50 pips above it, but I closed it out because that was 135 pips at that point. But I had to sit through. I just wanted to break down just like this whole structure, I want to journal and document my mentality, just going through the trade as it was, as everything was playing out. This consolidation is really what almost got me out, but I measured everything, even from this point here to this point here. Nothing really pulled back to 50%. 50% or 61.8. From this lower low to this lower high being broken, creating a new higher high on a 1 minute, nothing pulled back. So that kept me aligned to measure for my risks of where price could possibly come and stop me out. Because even this candle right here, when it pushed back, I'm like, it's coming down, it's trying to stop me out, it's about to stop me out. And I drew my lines to keep everything intact so that I know as long as price doesn't violate these levels, then I'm cool, I can survive, I'll make it through. And I just sat through this consolidation, and then just having those levels there helped me to stay sane and helped me to stay just focus on staying in the trade and not letting the trade close out. It's not me stopping the trade out early out of fear and out of overthinking and feeling like, oh man, I don't want to lose. So it worked out, man. That was like 200 pips on the day for the win. I did have this negative 25 pips. I really didn't even have to take that loss. That was around this time when price pulled back like this. I stopped myself out. It would have never stopped me out, but it's cool because even though I took that loss, I got back in 1 minute later and actually got a win. So again, this is gold. Today is Thursday, May 29th, and I'm gonna catch y'all on the next John.